conversation. Warm welcome on a quarterly basis on a headline number. Things standing up in China, Julia, not so our miners into the finish. Admittedly, that had been a seesaw play today for BHP and Rio, but how do you think the market's grappling with this China story?
Carson, I think there was a sense of relief today after we did see those second quarter GDP numbers coming in at 7.5% as expected. And I guess the challenge for China is to seek reform while managing the short-term pain that might cause. And today, I guess there were signs that they were managing to do that. We have a look at industrial production, 8.9%, retail sales, 13.3%, fixed asset investment, 20.2%. So while we did see a fixed asset investment and industrial production showing signs of slowing, it wasn't by much at all. And if we have a look at what's fueling China's growth, it is still infrastructure and property there. So things are changing, but very, very slowly. And I guess in terms of the market, it was in line with expectations. We have a look at the Australian market and the reaction today. You can tell a lot around expectations, around how the market reacted. You can see that going into these numbers at midday, we saw the Australian market actually declining, and once the numbers came out, we saw a recovery before tapering off towards the afternoon. Part of that tapering off in the afternoon was the fact that we saw a lack of volumes in the market, less than $3 billion worth of stock trading hands. But I think the two areas which were biggest impacted by the numbers were the financial sector and the material sector. We have a look at the financial sector during the day. It was actually a positive impact on the financial space. You can see around midday we saw a lift, and although we saw a bit of a pullback around 2 o'clock, the financial sector actually finishing the day higher than where it started. But as you mentioned, Carson, the material sector, while it did see initial lift, we did see it drifting back down again. Stocks like Newcrest Mining down more than 3%, but altogether a pretty positive set of numbers, but not too much happening in terms of the Aussie share market. A very slow day. One area that was very good was some of the global exchange traded products. We did see the Aussie dollar falling below 90 cents briefly over the weekend. And some of those global ETFs doing extremely well. We have a look at the one that tracks the S&P mid cap, as well as the S&P small cap index, as well as the global healthcare index. All of these hitting 52-week highs. So it does look like domestic investors may be trying to get overseas exposure, and that seems to be doing very well in the face of that falling Aussie dollar.
It's very interesting you highlight, of course, the sub $3 billion story to this market today, because inevitably does that account in part for the wild swings in stocks like Billabong, Treasury Estates and Friends? You know, is that just symptomatic of next to no liquidity?
Absolutely. If we have a look at the Aussie dollar, there's a short-term impact and there's a long-term impact. And I guess when we have a look at the short-term impact, we look at it in terms of foreign inflows and outflows out of the market. And a falling Aussie dollar tends to be a negative for the Australian market in the short term. However, the medium to longer-term impact is on earnings. And this is where it has a positive translation in terms of earnings expectations. So that falling Aussie dollar, actually good news for share market earnings here in Australia, although we're not really seeing it too much in terms of performance. So what's going to be interesting this August earnings season is not only the past year's results, but really the forecast for the current financial year and the way that Aussie dollar is going to impact on earnings. Of course, Treasury Wine Estates is in a bit of a different basket where it has been struggling with those Australian brands in the US and struggling in terms of managing inventory. So it really does need to deal with those problems there. But one of the worst performers on our market today, down by 12.2%.
Let's look ahead. Let's kind of almost pretend today away. It was a good finish, but what is going to be the next test for markets domestically?
Well, this week's going to be massive on that resources front, both in terms of the materials and the energy space. And really, we're watching stocks like BHP Billiton, Rio Tinto. Rio Tinto will be the first one to come out with quarterly production report tomorrow. And then we have BHP Billiton on Wednesday, followed by Fortescue Woodside Petroleum on Thursday, and then Santos on Friday. So it's going to be a massive week. I guess it's taken off with these China GDP numbers, which are very important for those miners. But if we have a look at what's expected in terms terms of BHP and Rio Tinto. The Port Hedland iron ore shipments, they were up 22% for the quarter on quarter. So we actually saw quite a good number there. So expecting to see that the iron ore production side of things will good for both BHP and Rio Tinto. For Rio Tinto, it's more important because iron ore makes up about 80% of its earnings. And in terms of Rio Tinto, we are expecting to see iron ore up by around about 6% quarter on quarter, and that would bring it up to a run rate of 244 million tonnes per annum. BHP Billiton, we're expecting to see some good numbers there, and I guess we're watching both the iron ore side of things as well as the petroleum there. We know in terms of the petroleum side, BHP has already said it is targeting a run rate of about 240 million barrels of oil equivalent, and that means for the quarter it's expecting just over 63 million barrels of oil equivalent in terms of production. And in terms of iron ore, we're expecting to see it pretty close to that run rate that it's specified of 200 million tonnes per annum out of its Western Australian operations. So that would bring the production for the quarter pretty close to 50 million tonnes for the quarter in terms of iron ore. So these are going to be the two major ones over the next couple of days. Technically, both these stocks are looking quite good. BHP has bounced off very close to that $30 to $31 support level. So if we do see a good production number come through, hopefully that will continue to support that bounce.